Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld. Here are 3 things to pay attention to for the upcoming trading week. Now, we always start things off with earnings season, and it's really quiet right now. It's kind of boring. There are a couple names that you should be paying attention to, so let's just get down to it. Now, we only have 95 companies reporting this week. Monday really gives us nothing. Tuesday is when it all starts. You've got Paychex reporting earnings on Tuesday. Wednesday brings you Lamb Weston and Schnitzer Steel. Thursday is probably the biggest name, Constellation Brands and ConAgra Brands, and Friday brings you Jinko Solar, which of course we know that alternative energy and solar have been very popular now, so we'll see how those earnings are. But they're not major market movers. Now, what is a major market mover? Central banks. That's right, we're going to go to the Royal Bank of Australia. They have a rate announcement coming up on Tuesday. That's going to be just after midnight on Tuesday morning. So for those of you who are up trading that currency pair, it will be early in the wee hours of the morning. Now, that said, why is this important? Why are we making it a Monday morning must-knows? Well, it's technically going to be for Tuesday morning. However, the Royal Bank of Australia has been saying their rate is too high. The currency valuation is too high, and they've been one of the most transparent central banks out there. If they say that their currency is too high, they will push it lower. Now, right now, their rates are pretty much at zero, so how low can they go? Will they go negative? That's the big question. What will they say at their press conference about how they're going to push their currency down? If you're trading the Australian dollar, it's pretty much a telegraph punch that they're going to keep pushing prices down. The question is, how are they going to do that? What interference or intervention will they do with their currency to help drop it down? And we'll have to wait and see what transpires on Tuesday from their announcement. Now, the big news has been recently about President Biden coming out with a new plan, trillions of dollars into the economy, and that is going to be talking about infrastructure spending. It's actually the American Jobs Plan. Now, this $2 trillion bill, yes, a $2 trillion bill, is going to be all-encompassing. It's basically throwing money into every segment of the market, which of course would create tons of jobs. But let's run through a list of where that money is going, because this may allow you to custom tailor maybe longer term investments based off of those announcements. So we'll start things off with one of the more interesting ones recently, which have been electric vehicles. $174 billion going into the electric vehicle space, and there's talks about building a national network of electric charging stations and money going to these car companies. That could be interesting. Number 2 here is $115 billion for modernization of roads. We're talking bridges, road infrastructure, much needed. I think $115 billion might be a little small, but hey, I'm not the one signing the bills. Now, we keep going down here, $213 billion to retrofit homes. Now, there's a big open-ended question here is where's that money be going? What retrofitting of homes will be done? Bottom line is $213 billion will probably help the housing market a little bit. Moving down, $111 billion for water infrastructure, talking about replacing all lead pipes. That will probably be very beneficial for those who like clean drinking water. $100 billion to upgrade schools, $100 billion for expanded broadband, and then the big daddy, $400 billion to caregivers. That's right, we've got a biggest chunk of the pie going to caregivers. Now, not that that's good nor bad. Bottom line is, this is the first attempt. So you have Biden saying, here's $2 trillion. What will probably happen is both sides of the aisle will be arguing, say, we can't have that, and we don't want this, and you need to change that. And it's like going bargain shopping anywhere in a foreign country. You go there, and you're at some flea market, and they say, well, this is going to be 50 euros. You go, 50 euros? Give me 25 euros, and I'll take it from you. They go, no, 40 euros. You go, oh, how about a deal at 32.50? Deal. So we'll probably come to some compromise as to lower than $2 trillion. The question is, which initiatives will get the money? Which ones will be removed from this? Bottom line is that discussion will be ongoing all next week and probably for the next few weeks, but it will be important for us as we start to look at longer-term investment plays in that arena. That's your Monday Morning Must Knows. We'll see you next week.